Hey guys, welcome back to another video, and today I'm here to talk about a stock that I think has a lot of potential. Definitely a great investment long term. This is one you want to hold 20 to 30 years at least, I'd say. Definitely good to put in your Roth IRA. You know, if you have kids, buy it for your kids. If you're younger, buy it if you're younger. Even if you're older, this is a great stock that's going to give you a lot of money in the long term, in my opinion. So be sure to like the video if you enjoy it. Subscribe to the channel if you want to see more of this content, and also leave a comment down below of what you guys do want to see. If you want to see me cover any different stocks, what stocks you guys are buying, I'm always interested in that. And let me know how you feel about the video. I'd really appreciate the feedback. So yeah, let's get right into it. Today's a Sunday. You know, market's down. Not close, or it's not open. It's closed today. But I just thought I'd make this video for you guys because there's a stock that really has been grabbing my attention recently, and that is ticker symbol O, Realty Income. Realty Income Corporation is a stock that, you know, it's been on the uptrend recently. Would have wanted to get into it a little bit earlier maybe. I actually had a few shares. I'm not in a current position in this stock right now, but I will be very soon. I'm going to buy some, put it in my Roth IRA. Just to have some exposure to real estate, because why not? I think that growth ETFs are the best option, but I think real estate, having it in there is definitely very, you know, when the market's volatile going down, real estate, you know, tends to stay pretty steady. So we can see that year to date, the stock is performing very well. The past year, the stock's all right, and then the past 5 years, the stock is down 8%. Now, this is a little misleading because the stock has a dividend yield of 5.53%. Almost unheard of in the stock market, honestly. For a stock that doesn't just go to zero, to have a dividend yield that high, the stock is holding their own, as you can see. They are down in the past 5 years. That is a little unfortunate. And then all time, you can see they're up a lot. Great company. If you've been holding them since, you know, 2000, this is a company that's made you a lot of money, for up 441%, and these massive dividend payouts that I think they pay, yeah, monthly, quarterly. I'm not entirely sure, but they pay, you know, a very sizable dividend. That's why you'd want to be in this company. But you can see right here, this is a pretty large company, $50 billion. PE ratio is fine, and we see right here the dividend yield is very, very good. But I mean, this company was up a lot more. I mean, you can see right here, they were trading in the 70s, you know, mid 70s. I think their 52-week high actually is almost 65. So you can see right there that this is a company that was trading a lot higher at one point, and you know, they dropped a lot. They were actually up here in 2024 in the $65 range, and then you can see over here in 2022 they were in the $75 range. So that was very impressive. That was a good time to be a shareholder, but they've dropped a lot since then. And that is what I want to get into today, why they've dropped. So this company is a real estate company. They take out a lot of loans, as you can see from their financials over here. If we go to the balance sheet and we check out their long-term debt, they have, you know, this is in, yeah, they have a good amount of long-term debt. This is in the millions. So they have, you know, it's $24 billion in debt pretty much. And that's a sizable amount of money. They're a $50 billion company on the stock market. That's their market cap. So to have that much in debt, and you can see it's growing pretty rapidly too. They bought a lot recently because interest rates were so low pretty recently. That's what I want to get into next. But you can see that, I mean, this is, you know, they've been growing very fast with this debt. They've been adding a lot of properties, a lot of acquisitions. And then you can see right here actually that their net income is growing up quarter over quarter too, pretty good. You know, I mean, they've had a rough past quarter. That's, you know, amid the stock price drop, but you can see that the past, you know, from here to here to here, their net income is definitely increasing. This is a company that is in a very good spot. I think that they have a very bright future, and that is because the Fed rate is what drives this company because of the interest rates on the loans. We can see right here actually, if we just look at like historically where the stock price was when the company was when rates were lower, we can see that, you know, in 2019 the stock was almost $80, in 2020, 2021, 2022, and it's kind of fallen since then. And if you look at the way that this chart compares, it's almost kind of similar to, you know, this chart right here, because but in reverse almost, because when the Fed raises rates, interest rates are higher on the loans, they have to pay more money. Realty Income stops buying as aggressively, they pay more money to the government on that interest, and yeah, I mean, their company doesn't grow as fast when the rates are that high. But we just experienced a very, from 2022 to 2024 here, a very fast rate hike cycle. And these come, every so often. You can see 2006 to 2007 right there. There was one. There was one right here, 2016 to 2019. Little one right here, 1999 to 2000, and then even another one right here. We have 1993 to 1995. These these rate hike cycles come all the time, and I don't think rates are gonna stay at whatever they are right now, 4.33% forever. I think that interest rates are going to drop eventually. I think that there's a lot of worry in the market and a lot of thoughts. Oh, what if interest rates never drop? But I think that's a very short and narrow view on the interest rates. I kind of think that they come in these cycles, and the best time to buy stocks like ticker symbol O, Realty Income, is when we're in an interest rate hike cycle. That is just perfect time. I mean, the stock price, you can see it's dropped very significantly since it was trading at almost $80 a share right here. And ever since then, it's, they still pay that dividend, which is also another great reason to get into this company. Look at their dividend yield. They've increased, I have a chart right here, actually. They've increased their dividend yield, or they've increased their dividend payout 127 quarters since 1994 when they went on the stock market, and they're actually right now on 108 consecutive quarterly increases, and their compound average annual growth rate is approximately 4.3% just on their dividends. So dividends, the thing with dividends is they're assured payouts. Like, the stock market can go, a stock can drop 20%, but you're still getting the 5% dividend of whatever that stock is, no matter what. So that's why people love dividends. It pays out directly to you. You don't have to sell stock. It pays you in cash compensation. You can decide to put that back into the stock if you would like, but if you don't, you can use the money for whatever you want. And it's taxed differently than long-term gains, dividends. So there's a lot of things with dividends that are different than holding an ETF and cashing out shares. And we can see right here actually that they've increased very, very well over the past 100 quarters in a row. And then the yield right here, we can see that's just the past year. That's not very, telling of what the stock is. But taking a deeper dive into these financials too, we can see that their cash flow looks good. Operating cash flow is increasing. And we can also check out that their income, their revenue is also increasing quarter over quarter very, very well. We can see their revenue growth year over year is, 10%, 26%, 60%, 22%, 29%. So the top line of this company is growing. There's definitely, you can see the interest expenses going up too. This company is very debt heavy, and they thrive in low interest rate markets, and that's where I think the U.S. is heading in the future. I don't think they're going to stay at these rates forever. I hope not. I hope for you and for me that they don't. But I think that the ticker symbol O is a great buy right now. This is a company that, I've held them before, but I've mostly like holding their shares in my Roth. I don't buy a lot of this for my regular portfolio. Mostly a Roth play right here, because Realty Income thinks that it's a very good 5 stars. I like Realty Income. Uncertainty is low. They definitely know where the company's going. Economic moat, they don't need one. They're in the real estate game, and their fair value is $75. They're trading at $56. That's $20 more for a company that pays a dividend yields of almost 6%. So that's pretty, that makes me feel pretty good when I see that. And the thing with this, actually, like what they say here, it's their triple net portfolio. So there's actually, I've heard it called the Triple Crown portfolio is what I've heard it called. So let me look it up and see. Yeah, so the Triple Crown portfolio is actually one, oh, that's not what I wanted to see right there. It's an investing strategy. So the Triple Crown portfolio, let me see if they talk about it right here, but what I thought it was, it comes in this is Triple Crown Wealth Management. No, there's something, I forgot the exact name, but there is a portfolio where you have three funds, and it consists of bonds, growth ETFs, and real estate stocks. So if you don't own any real estate, I mean, I've definitely wanted to get into owning some real estate pretty soon here, but I don't have the funds right now. So I will get exposure to that market and the growing market of real estate through buying ticker symbol O. It's $75 a share. Even if you don't have $75, or it's not $75, it's $56.90. And if you have $20, you can buy a partial share on Robinhood, a fractional share if you have Robinhood, and it's very easy to get set up. So yeah, I mean, there's a lot of things you can do with a little bit of money and still be involved in real estate. So there's really no excuse. And I mean, I think that portfolio is very good. I'm more into growth ETFs and real estate, not really a big bonds guy. I haven't looked too deep into that yet, but definitely real estate and stocks are where my head is at. And I think that this is an amazing stock with a prime time to buy right now. I think now it doesn't get much better than where the stock is at right now. And I don't think it's going to drop a whole lot more unless we have something crazy in the economy. And if it does drop a whole lot more, I'll be sure to buy a whole lot more. I mean, it's pretty, cause and effect. You want to buy this stock when it's low. I mean, we can see that, I mean, with great companies like this, every time they drop, they do tend to go up. So, I mean, with that 5% dividend yield too, you can feel pretty safe that that you're not going to be out of a lot of money, because that yield is pretty hefty. That would make me feel pretty good about buying this stock and being pretty sure that money is going to be made. But yeah, guys, I mean, that's pretty much all for today's video. I appreciate you for watching. I hope that I added some, knowledge to your day. I know it's a weekend. Market opens tomorrow, so you could buy the stock tomorrow. I think it'll be a great buy. Be sure to like this video if you enjoyed what you saw, and also subscribe to the channel, please. It helps me out a lot. We're about to hit 40 subscribers. We're at 39 as I'm recording this, so that would be very appreciated. And also comment down below. What do you guys want to see? I'm open to any ideas. So I'll catch you guys in the next video. Thank you for watching. Peace.